When foreign investors establish a company in Vietnam, one of the first operational tasks is finding an accountant, and in many cases, the decision happens very quickly. A recommendation from a friend, a low monthly fee, a provider found online, or someone who promises to handle everything. At first, this may appear practical, because accounting is often viewed as a routine administrative function. But many foreign investors later discover something important. The accountant you hire in Vietnam can directly affect your tax exposure, audit readiness, licensing compliance, payroll structure, banking credibility, and even your ability to transfer profits abroad. And unfortunately, many businesses only realize they hired the wrong accounting provider after operational problems have already started. Many startups and SME foreign investors entering Vietnam understandably want to reduce operational costs during the early stages, and accounting services are often selected based mainly on low pricing. At first, everything appears fine, reports are submitted, taxes are filed, operations continue smoothly. But over time, hidden weaknesses begin surfacing: incomplete documentation, weak audit preparation, incorrect tax treatment, payroll inconsistencies, or accounting records that cannot withstand professional scrutiny. Because in many cases, the provider was focused only on mechanical filing, not long-term compliance management, and by the time these problems become visible, correcting them often becomes expensive and stressful. One of the most common misunderstandings foreign investors have is assuming all accounting firms in Vietnam operate at the same level. In reality, supporting foreign invested companies requires a very different set of capabilities. FDI companies may involve foreign shareholders, cross-border transactions, expat payroll, intercompany arrangements, foreign contractor tax exposure, and English reporting requirements. An accounting provider experienced only with small local businesses may still complete basic filing work. But over time, the company may develop hidden compliance risks, because the provider does not fully understand the operational realities foreign-owned businesses face in Vietnam. This is why choosing an accounting provider should never be treated as a simple administrative decision. One of the most dangerous aspects of weak accounting structures is that problems usually remain invisible during normal operations. Monthly filings may appear completed, no authorities raise concerns, and management assumes compliance is functioning properly. But beneath the surface, risks may already be accumulating: weak documentation, payroll inconsistencies, incorrect accounting treatment, or poor audit preparation. These issues often remain hidden until the company faces an audit, tax inspection, banking review, licensing procedure, or profit repatriation process. At that point, management realizes the accounting structure was never designed to support long-term operational defensibility. Many experienced foreign investors in Vietnam now consult legal advisors before hiring accountants. Why? Because lawyers who regularly support FDI companies often see what happens when compliance structures fail. Tax disputes, audit complications, licensing delays, payroll exposure, profit remittance problems, or operational disruption caused by weak accounting management. At LTS Law, we regularly advise foreign investors, not only on company setup, but also on maintaining sustainable compliance structures afterward. This gives us a broader perspective on what foreign-owned companies actually need from accounting providers over the long term. At LTS Law, we do not simply recommend accountants randomly. We help foreign investors identify accounting and audit partners that have been professionally assessed based on practical FDI operational requirements. We prioritize providers with strong English communication capability, experience supporting foreign-owned companies, transparency and responsiveness, ethical professional standards, practical understanding of startups and SMEs, and the ability to coordinate effectively during audits, inspections, and compliance reviews. Because foreign investors need more than someone who submits reports, they need compliance partners capable of supporting operational stability as the business grows. One of the most underestimated risks for foreign investors in Vietnam is communication failure. Some accounting providers may complete filings correctly, but fail to explain compliance risks clearly. Questions receive vague answers, problems are minimized, or management only learns about risks after authorities or auditors raise concerns. This creates dangerous operational blind spots. At LTS Law, we believe foreign investors should fully understand the compliance structure behind their business, because sustainable operations require transparency, not simply administrative filing. Imagine a foreign entrepreneur establishing a consulting company in Vietnam. At the beginning, the business selects a low-cost accounting provider recommended online. Everything appears functional. Monthly reports are submitted, operations continue normally. But several years later, during annual audit preparation and profit remittance planning, serious issues emerge. Supporting documentation is incomplete, payroll records contain inconsistencies, and auditors begin raising questions about historical accounting treatment. Management then realizes the accounting provider had never proactively identified the compliance risks developing inside the business. The company now faces expensive corrective work under significant pressure. This situation is far more common among foreign-owned companies in Vietnam than many investors expect. For foreign investors, accounting is not only about taxes. It affects audit readiness, profit repatriation, labor compliance, banking relationships, licensing procedures, investor reporting, and operational credibility. This is why choosing the right accounting provider from the beginning can significantly reduce long-term business risk. Strong compliance structures are much easier to build early than to repair later after problems have accumulated. Many foreign investors only realize the importance of accounting quality after compliance problems begin affecting the business, but by then, correcting structural weaknesses often becomes expensive, stressful, and operationally disruptive. At LTS Law, we help foreign investors understand that accounting provider selection should be treated as a strategic business decision, not simply an administrative task. If you are operating or planning to establish a foreign-invested company in Vietnam and want guidance on selecting suitable accounting or audit partners, book a consultation with LTS Law before making your decision. Because in Vietnam, the accountant you hire today may directly affect the future stability of your business tomorrow.